Hi, everyone, and welcome to the Buffett and Beyond Research Saturday Stock Market Recap for July 12th, 2025. Remember, folks, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, well, just like last week, the market had another great week hitting new highs, and Friday ended with a weakening market as maybe it came too far too fast. Now, we said this last week, but when all is said and done, we are just above the same point where we were at the highs of this past February, just by a few points here, folks. So we're not making really high highs, just nominal new highs. And our weekly stock analysis video, well, Taiwan Semiconductor had perceived worries by investors when they made all their chips in Taiwan, where they could be subject to their Chinese cousins. In other words, China says Taiwan belongs to China. But now they are investing $165 billion, that's with the B, folks, in plants in Arizona in the U.S. of A. Now, this stock is up 50% since the decline earlier this year, as some of the worries about China and Taiwan are dissipating because of all that investing and making a lot of their chips in the U.S. And when we get to our ETF video, the finance ETF is one of the best this year, and the top stocks in that ETF are up double the S&P 500. Now, let's see how we pick those stocks by using the computer program. This is going to be very, very good, folks, and very, very educational. And let us look at the S&P 500. We come in and we see that we are about the same as we were last week, actually a little below the previous highs. So we were thinking that last week we would come down and test this 20-day moving average in here, but we haven't done that yet. But we're going to show on the next chart where maybe that topping action is just taking a little longer than expected, but we'll see. Let's take a look at that. Down here, this indicator doesn't show us anything, but on the next chart, it may, just may, be showing a decline. But let's see. Now, here we are, and this is a shorter chart, and up here is a short-term indicator, and we got this double top last week that we were talking about, and that's what made us say that we're going to go down and test that 20-day moving average, which is right here. But then the market came down, went back up again, made another new high, right here in this S&P 500, but this is a much lower high, so we just may get that weakness this coming week. Yes, that's a tongue twister, weakness coming in this coming week. But the thing is that we don't expect too much of a decline because we are right into earnings season, just beginning earnings season. Usually during earnings season, about 75% of the stocks come out better than their expected returns, and I'm talking about their earnings, and thus we have an uptrending market during earnings season. So if we do go down and test this 20-day moving average, I don't see a further decline in here, and people are getting used to buying the dips. Now, down here, we can see here's this indicator. Once again, we see it's just starting to roll over to the downside, and I'm recording this about an hour before the market closes today, so we'll see what happens. But if it closes down Monday, and Monday's usually a weekday, we know that from past experience, this might turn down, and then we get higher highs in the market, and we get a lower high in this indicator down here. So that's what has us a little bit worried. Now, the SPY is at 624 right now, and remember the SPY is about 1/10 of the S&P 500, and for a $150,000 portfolio, we have these puts in place. Now, we're also putting the QQQs in place, and I want to show you something right here. The QQQs, which is the NASDAQ 100, is at 555 as I'm recording this, and we can see the July put, the August put, and the September 19th put. Now, these puts are very, very inexpensive, so we can see right here that the July 18th put costs 50 cents. The August 470 put cost 84 cents. So you see the difference of about 30 days in here. But the September 470 put is $2.64. Now, why is that so different between August and September than it is between July and August. And the reason is because guess what happens in September and October? Yeah, September is a very weak month usually, and then October is when the market finally bottoms. If there's a correction in September, October is when it finally bottoms. So the September and October puts are much more expensive because they're expecting that decline. And so we'll see what happens. But just to let you know that we started this following these puts in the daily letter, and we just start putting that out this week. So, folks, we had another good week. It didn't do anything. The market didn't do anything, but it didn't go down. So we're happy about that. Wrote some covered calls, and everybody's happy. Got a few bucks to spend this weekend, so go out, spend some money, be with your family, and most of all, be safe. And folks, we'll see you right back here in a couple of days.